Yo. The reason why I titled this last bit of learning is because I've been learning too much. That's the truth. I've been learning too much and I've not been executing much. So I want to make sure I do it the other way around, just like learn and execute type of shit. You know what I'm saying? But anyways, let's get back. So
I look at this and I'm like, oh my god.
all right,
They explained to you previously, but there's also one always areas of liquidity. They're always
all right.
pushing to these levels, right? And then essentially what you have, all of these sellers getting triggered, and so that essentially enables smart money to get into their position.
Give me a second. I gotta let me make sure I let the boys real quick. What up? In a second, guys. Inspiration. Okay. All right. We're good. All right. Let's get back.
Of trading strategies.
All right. Let's see what's going on here.
Let's do something so that we can make it look like something's going to happen, so that we get so many people acting on that thing that's going to happen that never really happens, but because they thought it was going to happen, then money in the market, and who's on the have to goal is to what? Sell the apple for $5. So it gets
right.
That take profit level, you are selling the apple at a higher price. Or if you're shorting, you're selling the apple at a lower price, and you are making the difference, right? So
exactly. Yep. That's right.
Every time then you enter into a trade or you close a trade for a stop loss or a take profit, you put
What up?
liquidity into the market. Profit level, you are selling. So both your entry, again, is it really? It's simply just the entries, stop losses, and take profits of other market participants. So why is that liquidity? Well, every time you get tagged into a trade or you enter a trade, you add liquidity to the market. You have now bought or sold a certain pair. Now, every time that you get a stop loss, you have to buy or sell back that pair at a loss. That is a stop loss. But liquidity is coming into the market, right? You don't open a trade and then just get out of a trade. No, you buy or sell, and then you buy or sell again the same amount back to the market at a loss, at a different price. Let's say you bought an apple for $1. You put liquidity into the apple market, but then hit your stop loss. You don't just close the apple. You sell the apple for $0.5 and you take a $0.5 loss. So both your entry and your exit are liquidity. But the same is true for the take profit. Every time you enter into a trade, right, you buy or sell the apple for $1. Your goal is to what? Sell the apple for $5.
That's right.
Yep. So when it gets to that take profit level, you are selling the apple at a higher price. Or if you're shorting, you're selling the apple at a lower price and you are making the difference, right? So when it gets to that take profit level, you are selling the apple at a higher price. Or if you're shorting, you're selling the apple at a lower price and you are making the difference, right? So every to a trade, right, you buy or sell the apple for $1. Your goal is to what? Sell the apple for $5. So when it gets to that take profit level, you are selling the apple at a higher price. Or if you're shorting, you're selling the apple at a lower price and you are making the difference, right? So every time then you enter into a trade or you close a trade for a stop loss or a take profit, you put liquidity into the market. Now here's where it gets interesting. The big players in this market, the ones who really move the market. Now here's where then you enter into a trade or you close a trade for a stop loss or a take profit, you put liquidity into the market. Now here's where it gets interesting. The big players in this market, the ones who really move the markets, they know all of the different places where you are going to buy or get out of your position because it's so predictable, right? Any broker that you will sign up to will buy or get out of your position into the market. Now here's where it gets interesting. The big players in this market, the ones who really move the markets, they know all of the different places where you are going to buy or get out of your position because it's so predictable, right? Any broker that you will sign up to will going to teach you trend lines, support and resistance, equal highs, all of these vague concepts on how you should trade. And unfortunately, that is the way that 95% of traders trade. And so when I say sign up to, we're going to teach you trend lines, support and resistance, equal highs, all of these vague concepts on how you should trade. And unfortunately, that is the way that 95% of traders trade. And so when I say retail liquidity, I'm referring to we have to identify where is everybody else getting into the market and where is everybody else getting out of the market and how can we avoid those areas because smart money use that liquidity against them because for every buyer there needs to be a seller. So if smart money want to take price lower, they want to sell price up, well, they need someone on the other side of the market to take the opposite side of the position. For every buyer, there needs to be a seller. There needs to be a seller. So if smart money wins the market, and where is everybody else getting out of the market? And how can we avoid those areas? Because smart money is the way that 95% of traders trade. And so when I say retail liquidity, I'm referring to we have to identify where is everybody else getting into the market and where is everybody else getting out of the market? And how can we avoid those areas? Because smart money use that liquidity against them. Because for every buyer, there needs to be a seller. So if smart money want to take the price lower, they want to sell price up, well, they need someone on the other side of the market to take the opposite side of the position. For every buyer, there needs to be a seller to support the support and resistance, equal highs, all of these vague concepts on how you should trade. The big players in this market, the ones who really move the markets, they know all of the different places where you are going to buy or get out of your position because it's so predictable, right? Any broker that you will sign up to will going to teach you trend lines, support and resistance, equal highs, all of these vague concepts on how you should trade. And unfortunately, that is the the way that 95% of traders trade. And so when I say retail liquidity, I'm referring to we have to identify where is everybody else getting into the market and where is everybody else getting out into the market. Now here's where it gets interesting. The big players in this market, the ones who really move the markets, they know all of the take a $0.5 loss. So both your entry and your exit are liquidity. But the same is true for the take profit. Every time you enter into a trade, right, you buy or sell. Now here's where it gets interesting. The big players in this market, the ones who really move the markets, they know all of the different places where you are going to buy or get out of your position because it's so predictable, right? Any broker that you will sign up to, we're going to teach you trend lines, support and resistance, equal highs, all of
Retail concepts, basically. That's why it's retail liquidity.
these vague concepts on how you should trade. And
Retail concepts? I don't want to add retail liquidity. I mean, it's true. It's true.
unfortunately,
He has a point. He has a point.
is the way that 95% of traders trade. And so when I say retail liquidity, I'm referring to we have
I feel like brokers low-key like make people pay for like retail concepts to learn retail concepts just to take their money. Like basically people pay to learn retail concepts and then they don't realize it, but they are the liquidity. So essentially they're adding more money into the fucking market. So
have to identify where is everybody else getting into the market and where is everybody else getting out of the market, and how can we avoid those areas? Because smart money use that liquidity against them, because for every buyer there needs to be a seller. So if smart money want to take price lower, they want to sell price up, well, they need someone on the other side of the market to take the opposite side of the position.
yeah, for every buyer there needs to be a seller, obviously.
Every buyer, there needs to be a seller to support the transaction. If there's only a buyer but there's no seller, there's no transaction that will take place. So
Right, yeah.
what does smart money do? Because they're smart, they understand, okay, we know
What does smart money do? Because they're smart.
all of these different types of trading
That's funny.
strategies. So let's create in
What does smart money do? Because they're smart. That's so fucking funny.
reduce these types of trading strategies. Let's do lower. They want to sell price up. Well, they need someone on the other side of the market to take the opposite side of the position. For every buyer, there needs to be a seller to support the transaction. If there's only a buyer but there's no seller, there's no transaction that will take place. So what does smart money do? Because they're smart, they understand, okay, we know all of these different types of trading strategies. So let's induce these types of trading strategies. Let's do something so that we can
Yeah, it just means a bunch of zones where a lot of people make decisions, obviously.
make it look like something's going to happen, so that we get so many people acting on that thing that's going to happen that never really happens, but because they thought it was going to happen, their money in the market, and who's on the other side accepting those orders? Smart money. And that's when they move price where they really want to go to.
Yeah, it's basically a manipulation. Manipulation doesn't always have to be above a buy side liquidator or below a sell side liquidator. It could be a fair value gap manipulation. There's many other types of inducement. So yeah,
Because that's
I mean I get that. But okay, one thing that I wanted to sort of incorporate in my trading is basically the fact that if the liquidity is not taken out, for example, like you see over here, this liquidity is completely taken out, which means this is going to be a high resistance liquidity round, right? So obviously, like I have more faith in the fact that this will in fact go higher because of the fact that this low has been swept, right? These lows all have been taken out with this one massive liquidity drop, right? So I have pretty good confidence in the fact that this, okay, when we were here, that prices was going to go lower, and when we are here, price is going to go higher. You know why? Because this, let's see if this fair value gap is balanced out. Let's see. Doesn't seem like it. Oh, is it? Yeah, it is. No, not really. Nah. It's a potential point of interest, basically. This has been mitigated already. This has been used. This has not been used, but if I'm expecting a manipulation here, I'm expecting price to take it higher. So if I could like entry off this, targeting this low and targeting this high, boom, I have almost a 1 to 3. So I'm expecting a fair value gap within this little fair value gap. So this 15-minute fair value gap has to have a fair value gap within. So in this, if this breaks the internal term high, for example, if it breaks this, through the pullback, I will buy it. Alright. Through the pullback, I will buy towards this. Alright, simple as that. You heard me. Anyways, let's go back.
That's how they get their average prices filled. So this is a very important concept to understand. Okay, we know all of these different types of trading strategies. So let's a seller. So if smart money against them, because for every buyer there needs to be a seller. So
yeah.
if smart money want to take price lower, they want to sell price up. Well, they need someone on the other side of the market to
They need to fake the market basically, and then add their fucking liquidity so that they have more, induce as many traders as possible at liquidity, and then continue in the opposite direction.
take the opposite side of
Bye
the position.
bye,
Every buyer, there needs to
bitch.
be a seller to support the transaction. If there's only a buyer,
Bye
but no seller,
bye.
there's no transaction that will take place. So what does smart money do? Because they're smart, they understand, okay, we know all of these different types of trading strategies. So let's induce these types of trading strategies. Let's do something so that we can make it look like something's going to happen, so that we get so many people acting on that thing that's going to happen that never really
Yo, what the fuck? Alright.
It happened, but because they thought it was going to happen, then money in the market, and who's on the other side accepting those orders? Smart money. And that's when they move price where they really want to go to, because that's how they get their average prices filled. So this is a very important concept to understand, because what that tells us then is if we identify liquidity, which is usually equal highs, equal lows, support, resistance, key level, there needs to be a seller to support the transaction. If there's only a buyer but there's no seller, there's no transaction that will take place. So what is smart?
Yeah, that's right. So obviously, I mean, why am I looping this bullshit? Oh my god. I gotta lock in, bro. I gotta fucking focus, bro. God damn.
They understand, okay, we know all of these different types of trading strategies. So let's induce types of trading strategies.
Yeah. Trap as many people as possible, in other words. Smart money is not trying to trap you, but it needs liquidity. It needs liquidity for those large moves. So obviously they need as much liquidity. So they need to manipulate as many traders as possible. So it's just how the world works. You can't fucking go against their rules, you know? You gotta play by them.
Do something so that we can make it look like something's gonna happen, so that we get so many people acting on that thing that's going to. Let's do something so that we can make it look like something's gonna happen, so that we get so many people acting on
Induce
that
them.
Happen that never really happens, but because they thought it was gonna happen, then money in the market, and who's on the other side accepting those orders? Smart money. And that's
exactly.
when they really want to go to.
That's right.
Because that's how they get their average prices filled. So this is very important, because they thought it was gonna happen, then money in the market, and who's on the other side accepting those orders? Smart money. And that's when they move price where they really want to go to, because that's how they get their average prices filled. So this is very important concept to understand, because what that tells us then is if we identify liquidity, which is usually equal highs, equal lows, support, resistance, key levels, old highs or old lows. Because think about it, in this scenario you have right here, right, price is moving down, we have these equal highs, or some people look at it as resistance. Then when price comes back up to this level, right, let's say it comes up like this, what's going to happen? The sellers are going to step into the market because they think the price is going to go lower. So sellers step into the market where their stop losses go. Their stop losses probably go above these highs up in here, right? Whereas their take profits, are going to step into the market because they think the price is going to go lower. So sellers step into the market where their stop losses go. Their stop losses probably go above these highs up in here, right? Whereas their
exactly. So, but the problem with this is
their take profits are going to be probably somewhere at the next low. So what happens is price comes in, the sellers come into the market. If smart money wants to take price lower, what they will do is they've already created such a supply for these sellers. So what they'll do is they'll push price into these levels, right? And then essentially what you have.
Smart money's kind of funny, bro.
Which is usually equal.
They always push the fucking stop loss. It's like I swear to God, these professional traders, like where like newbie traders like us, like entry, these professional traders are probably like looking at your stop loss and just being like, yeah.
Equal high.
Oh my God.
Okay, and who's on the other?
Fucking inducement, man.
In those orders, smart money, and
exactly.
That's when they move price where they really want to go to, because that's how they get their average prices filled. This is a very important concept to understand, because what that tells us then is if we identify liquidity, which is usually equal highs, equal lows, support, resistance.
Yeah, equal lows, equal highs always have like resting liquidity above and beyond. So beyond.
Key levels, old highs or old is if we identify liquidity, which is usually equal highs, equal lows, support, resistance, key levels, old highs or old lows. Because think about it, in this scenario you have right here, right, price is moving down, we have these equal highs, or some people look at it as resistance. Then when price comes back up to this level, right, let's say it comes up like this, what's going to happen? The sellers are going to step into the market because they think the price is going to go lower. So sellers step into the market where their stop losses go. Their stop losses probably go above these highs up in here, right? Whereas their take profits are going to be probably somewhere at the next low. So what happens is price comes in, the sellers come into the market. If smart money wants to take price lower, what they will do
yeah,
is they've already created take profits. Their take profits are going to be probably somewhere at the next low. What happens is price comes in, the sellers come into the market. If smart money wants to take price lower, what they will do is they've already created such a supply for these sellers.
Yeah.
So what they'll do is they'll push price into these levels.
Trigger their fucking stop losses.
Right, and then essentially what you have, all of these sellers getting triggered, and so
yeah, that's right.
That essentially enables smart money to get into their positions. And then once we come into the liquidity, now a lot of the time when you're hitting their stop losses, that is acting as liquidity to go to the other side of the market, right? Because there needs to be someone else on the other side to take that order. So it acts in favor of pushing price toward where smart money want to take price towards. It's the same with every high and every low, right? There's always areas of liquidity. There's always liquidity that people look at trying to sell or buy from. We need to identify that and understand that so many times these levels get purposely manipulated just before going to the other side. Have you ever traded something like an equal highs or equal low strategy before? Or maybe you do right now. Do you not find it very, very weird how a lot of the times price will come back to your equal highs just to wick through it and then continue out in the direction that you want it to go to? That's not an accident. It's purposeful. Do you not find it very weird how a lot of the times price will come back to your equal highs just to wick through it and then continue out in the direction that you wanted it to go to? Equal low strategy before. Or maybe you do right now. Do you not find it very weird how a lot of the times price will come back to your equal highs just to wick through it and then continue out in the direction that you wanted it to
That's right.
or equal low strategy before, or maybe you do right now. Do you not find it very weird how a lot of the times price will come back to your equal highs just to wick through it and then continue melting in the direction?
It's a manipulation. Fake out inducement and then goes lower. Every price range needs to be like rebalanced low key. Like if I'm not seeing a proper manipulation sweep and like a proper fucking, let me see. If I'm not seeing one of these, then I don't really want to even entry. I need an inter-term high to be broken. Pull back and then entry from like a fair value gap somewhere here. Around somewhere here. Targeting probably like the equal highs over here. Let me just like long from here. Hypothetically, right? I would target from here to like here, I guess. Or even like these highs because I have an overall bias up to this point. It's like a 2.5, but
You wanted to go to?
tomorrow's a bank holiday, but let's see. Because tomorrow is in fact a bank holiday. Let's look at this. Yeah, it is a bank holiday tomorrow. So yeah. If US dollar is not working, that means the rest of the world is also not working.
That's not an accident. It's purposeful market manipulation for the
Yeah, manipulation right
clear and
here.
obvious reason I've already explained to you previously. But there's also one other type of liquidity. I said just before going to the other side. Have you ever traded something like an equal highs or equal low strategy before? Or maybe you do
I wonder if there's like people who are trying to long this.
right now. Do you not find it very
You just gotta look at the market in like support and resistance, trend line liquidity, non-manipulated, basically low resistance liquidity runs, and just look at people all over and identify that's basically inducement, right? All the inducement zones where people are sitting, in other words. And if you can sort of identify that, then you know what smart money, like if you can look at the market, like how smart money views the market, I think you can identify where people are. And if you have a broader vision as to where price is probably gonna like draw towards afterwards, then boom, you got it. You know what I'm saying?
weird?
So,
A
yeah,
lot of times price will come back to equal highs just to wick through.
because price is like smart money is always on this 4 hour, right? 4 hour and be above. So they're always like waiting for like some sort of manipulation here. As many support and resistance traders to be in the fucking market. You can see that this wasn't taken out, so I'm expecting price to low key go and take this out. Take out the trash, man. My bad. You see this? So overall, we have a pretty bearish bias, so you don't want to be on the fucking buy side of the curve, obviously. So I'm not trying to long this market low key. But you see this inverse fair value gap, which has not been retested before. So I'm expecting a retest of price over here and go lower. Okay. That's basically what I'm expecting. But that is if. Okay. So for now, obviously we have a bullish bias because I'm expecting price to low key pull back because it swept these lows, right? So I'm expecting price to low key pull back after this zone. So again, we will see a manipulation and a distribution leg right after towards this. So I'm expecting a pullback towards that. All right. So yeah, let's see.
through it and then continue melting in the direction to sell or buy from. We need to identify that and understand that so many times these levels get purposely
Identify. Man, what do you mean identify? The fuck?
manipulated just before going to the
Bro.
other side. Have you ever traded something like an equal highs or equal low strategy before? Or maybe you do right now. Do you not find it very weird how a lot of the times price will come back to your equal highs just to wick through it and then continue
Yes. Basically a price manipulation, so
melting in the direction that you wanted it to go to? That's not an accident. It's purposeful market
yeah, this is a description.
manipulation for the clear and
A
obvious reason.
description distribution.
And I've already
It's
explained
a
to you
description.
previously. But there's also one other type of liquidity, a type of liquidity that most people never use. In fact, most people never even think about using, and that is time-based liquidity. Yeah,
Sessions.
think about it for a second.
Session volatility. That's what he's going to say. I know that.
What is the most common thing amongst all traders?
I'm not trying to sound fucking like Einstein though. Am I Einstein? I don't fucking know. But the last time I checked, I was stupid as fuck. Minus 500 IQ.
Time that they trade. Most traders in America want to trade the American
NY,
Open.
yeah.
Most traders in Europe, in England, they want to trade
London.
the London Open.
Exactly.
So we have New York Open and we have London Open. Now, what's interesting is that if you think about it logically, right? Let's say right now in this grey box right here, this is just price. And the moment that we break out of this grey box, London session has started or New York session has started. Now, imagine just for a second, New York session just
I literally have this. If you want to use this, use this. It literally shows you where price is breaking through. So you see this? London took out the lows and New York is, see? London reversal, New York continuation, okay? I cannot say New York New York. New York. I can't pronounce that. I don't know. So much harder for me to like say New York. New York.
starts. Or learning session just starts.
The fuck? Alright, whatever. As long as we have this.
And then you see this. A big aggressive move in one direction. What do you think that does? Every trader, or a lot of traders at least, I look at this and they're like, oh my god, price is flying. I need aggressive
I need to get in.
move in
Yep.
one direction.
Pullback entry.
What do you think that does? Every trader, or a lot of traders at least, I look at this and they're like, oh my god, price is
I wouldn't be confident in this because these lows haven't been taken out.
flying. I need to get involved in buys.
Lower resistance to Korean.
It's my buys today. Buys. I'm looking to buy the market today. Or FOMO. Crap. Price is going. I need to get involved in the market. Price is going. Hello. What are they doing? They're buying. Okay. I'm gonna wait for price to come back. Right. Some people are doing a retest. Okay. I'm gonna put buy stops here. Buy stop here. Buy stop here. Okay. My stop loss is gonna go below our low or below these lows. Right. Again, another thing that you oftentimes have is what we have here. We have relatively equal highs as well. So it's combined time and liquidity. We have relatively equal highs, and then those highs have just been broken. And so what do you think everyone's looking at now? Oh my god, New York session just started. Just broke a major high. Buy. And then they're gonna try and get involved in the retest. Okay. Break and retest. Go. Right. So predictable. And so what I do is I combine all three of these steps in a very systematical manner. Understanding where is the market going to go because I know the direction of the market, where are the areas of interest that smart money have shown that they are involved in, and how do I identify retail liquidity so I understand where the manipulation is happening so I'm not part of that manipulation, and or I can target that manipulation because I know price is going to go there, I know where their stop losses are, I know the price is going to go to their stop losses, so better to take them, so I'm not a part of that manipulation interest that smart money have shown that they are involved in, and how do I understanding where is the market going to go so predictable. And so what I do is I combine all three of these steps in a very systematical manner by understanding where is the market going to, right? So predictable. And so what I
Oh my god.
New York session just broke a major high. Buy, and then they're gonna try and get involved in the retest. Okay, break and retest, go, right?
Where I get my position to go higher.
So predictable. And so what I do is I combine all three of these steps in a very systematical manner by understanding where is the market going to go because I know the direction of the market, where is the areas of interest that smart money have shown that they are involved in, and how do I identify retail liquidity so I understand where the manipulation is happening so I'm not a part of that manipulation, and or I can target that manipulation because I know price is going to go there, I know where their stop losses are, I know the price is going to go to their stop losses, so better to take price into their stop losses with them. Trading the zero-sum game, there has to be losers for everyone. That's just how the game goes. So I'm combining those three things, and so it looks something along the lines of this, right? Let's say, for example, price was like this, and price was bearish, right? So step number one, we are bearish, right? We have low, we have high, we have lower, low. Great. Step number one, we are bearish. That is my bias. I'm looking to go short, only short. I don't care about long, I don't care about impulsive moves upwards because I understand, right? Which a lot of people, for some reason, don't. But I understand that every time price puts in a new low, it has to come back. Puts in a new low, it has to come back. So if I know that it has to come back, I don't need to get involved in the buys. I'll wait for price to come where it needs to go and then continue trading low.
Yeah.
Low, it has to come back. Puts in a new low, it has to come back.
It's basically a pullback entry that you think it's a market structure shift. That low-key might be right. Ooh la 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 la. I'm gonna target like this low and take this trade here. I know it's a dumb fucking trade, but who cares? It's like a 2.3. But ideally I would want to see a bit of displacement above this fair value gap. Or even like a 1 minute market structure shift. I mean intra-term high being. See this? Kitty, sir. Alright, you see this? This fair value gap? Planning on entering here. Gonna put my long position right here. And put my stop loss right below this. And target these highs. Low key. This one. Get a 1 at 3.2. That's crazy. It's fucking crazy. Because these lows were swept. It's a fair value gap manipulation. That's what I'm saying here. So yeah, I could low-key take that. Because these lows were taken out, right? So only problem is the fact that we are in fact bearish. So until that point, we have a pretty good market structure. So yeah, ideally I wouldn't be taking this low-key now that I think about it. Because even if I had to take this fair value gap, I can only take it up to like this point, which is like nothing. So yeah, there's a lot of bearish strength. So overall, I would try to be on the, try to be a bear, like a little bear. Yeah, see, it's gonna retest this. So for as long as it did like retests, so I'm expecting like something like this. I'm expecting price to do this, bada bing, bada boom, after it sweeps this liquidity. Simple.
Come back. So if I short, only short.
But I'm not considering session volatility though. Because this is not fucking, what do you call that thing? Forex or anything. So the probably have manipulation distribution like right after.
Was bearish, right? So step number one, we are bearish, right? We have low, we have high, we have lower low. Great. Step number one, we are bearish. That is my bias. I'm looking to go short. Only short. I don't care about long and I don't care about impulsive moves upwards because I understand, right, which a lot of people for some reason don't, but I understand that every time price puts in a new low, it has to come back. Puts in a new low, it has to come back. So if I know that it has to come back, I don't need to get involved in the buys. I'll wait for price to come where it needs to go and then continue trading lower. So step number one is bias. Okay.
Yeah.
Okay, we're bearish bias in this example. Step number two, identify a key area of interest. So let's
Identify. Oh my god, where is this guy?
bias. Okay,
What's identify?
we're bearish
Bro, come on.
bias in this example. If I know that it has to come back, I don't need to get involved in the buys. I'll wait for price to come where it needs to go and then continue trading lower. So step number, if I know that it has to come back, I don't need to get involved in the buys. I'll wait for price to come where it needs to go and then continue.
Yeah, I guess I'm too fucking harsh on whatever the fuck he's saying. I should focus on the right thing, bro. Why am I focusing on the wrong thing? Hold up.
Move upwards because I understand, right, which a lot of people for some reason don't, but I understand that every time price puts in a new low, it has to come back. Puts in a new low, it has to come back. So if I know that it has to come back, I don't need to get involved in the buys. I'll wait for price to come where it needs to go and continue trading.
Yeah, that's like a fair value gap, inverse fair value gap, because the overall structure is obviously like trending lower. Even in this scenario, if you look at it in waves, see it overall just going lower. So we do have a bit of a market structure shift here because it overall took these lows, and because of that, I have a pretty good reasoning as to why the price would go higher. But if you look at the, because this is the 4 hour gap, right? And it took out these, so I'm expecting it to go higher. But as of right now, it's bearish because there's a 15-minute inverse fair value gap over here, right here, right? But over here, we have this bullish fair value gap. So this is just a manipulation. So I'm expecting price low key shoot up to this, right? So even if you do target, say, I need to see like a proper, yeah, this is not really worth it, to be honest. So let me just like not go for it. I'm expecting a retest, price retest, rebalance over here. So I'm expecting the manipulation to be here.
Trading lower. So step number one is bias. Okay, wait for price to come. I don't care about impulsive moves upwards. Say for example, price was like this and price was bearish, right? So step number one, we are bearish, right? We have low, we have high, we have lower low. Great. Step number one, we are bearish. That is my bias. I'm looking to go short. Only short. I don't care about long. I don't care about impulsive moves upwards because I understand, right, which a lot of people for some reason don't, but I understand that every time price puts in a new low, it has to come back. Puts in a new low, it has to come back. So if I know that it has to come back, I don't need to get involved in the buys. I'll wait for price to come where it needs to go and then continue trading lower. So step number one is bias. Okay, we're bearish bias in this example. Step number two, identify a key area of interest. So let's say, for example, there was just a little period of time where we had a little bit of a range in here, and then we had the move, right, just before this. Well, that shows me that smart money had just stepped in and got involved here. So let's say I have a period of time where we had a little bit of a range in here, and then we had the move, right, just before this.
The up close candles before the downward move. It's basically like a point of interest because that's where the market has temporarily sort of reversed and then gone higher. I mean, lower in this case.
Well, that shows me that smart money had just stepped in and got involved here. So let's say I have an area of interest, right?
Yeah, see? Over there.
I want to combine that with liquidity. So I know that just before my area of interest, I have the liquidity up here, the liquidity down here. I know that London session is about to just start right now, or New York session is about to just start right now. So therefore, I have a key level, right? Key high, Asia high, or London high as liquidity. And so I want to see, okay, I'm bearish. I'm only looking for shorts. I have a point of interest. Perfect. I have liquidity. Perfect. I want to see, before it even happens, I want to see a manipulation of everyone's liquidity. And then I want to see mitigation of a point of interest. And then I want to see confirmation, a market structure shift that tells me, yes, you are correct. I don't want to guess and gamble on every area. I want the confirmation. I want price to show me that I'm correct. And then I will answer. It's like being in a casino where you're playing a game of poker, but you get to see your opponent's hand before you even have to bet any money. You're not going to lose in the long run. So we pull back. We get here, and I just want to take and continue. Manipulation of everyone's liquidity. And then I want to see for shorts. I have a point of interest. Perfect. I have liquidity. Perfect. I want to see, before it even happens, I want to see a manipulation of everyone's liquidity. And then I want to see mitigation of a point of interest. And then I want to see confirmation, a market structure shift that tells me, yes, you are correct. I don't want to guess and gamble on every area. I want the confirmation. I want price to show me that I'm correct. And then I will answer. It's like being in a casino where you're playing a game of poker, where you get to see your opponent's hand before you even have to bet any money. You're not going to lose in the long run. So we pull back. Yeah, and I just want to take and continue riding the wave of the overall trend. And that, ladies and gentlemen, is the exact model that I trade. And to prove that to you, I'm going to now walk you through a step-by-step example in the live markets, showing you an exact trade that I broke down, right, for my members. It's an exact trade that I took. I'll upload the screenshot right here. Before my session with my members on Wednesday, the 7th of August, I showed them this, which is exactly what you're looking at right now. And then we seen exactly
Oh my god.
what I was looking for happen. Then you see me entering on Wednesday, the 7th of August.
Assuming this is London, and this is probably New York.
August, I showed them this, which is exactly what you're looking at right now. And then we seen exactly what I was looking for happen. Then you see me entering the trade. And then you see the result of that trade. And that's the exact trade that I'm going to show you.
Look at this auto block retest over here. I'm just seeing this like when I can't unsee. Look, auto block retest, right? This auto block. Boom. Auto block retest, manipulation, distribution right after. You see this fair value gap which has been tested and then mitigated at this point. So it's gone at this point. Like by this point, this has been gone. So you see this and you see that basically we're going towards this, right? So we have equal highs over here. So I'm expecting a price rebalance over here. But I should stop over analyzing the market low-key. TP? Question mark? Croissant? Yes, sir. This, you see this trendline liquidity? This has not been taken out whatsoever. So it's a low resistance liquidity run. So overall, I'm expecting price to low-key take this out and go lower. Because it needs to take this out. Because these swings have not been, you know, this needs to take it out. I need to see a proper liquidity sweep in order to be bearish. So I'm expecting this to be taken out. This has been rebalanced. So you see this is parallel to this fair value gap, inverse fair value gap. So it taps into this. And then it basically, I am so fucking shit at drawing, but you get the point. So this has not been taken out. It's supposed to take this out and go lower.
Today to showcase what it is that I'm talking about and separate myself from all these other guys that will just waffle but not show anything.
Oh man, he's calling me out.
Right, let's get into the details. But just before we dive into that, you take it.
This is, I think this is lunch. I'm not too sure. This is London. This is like lunch. He said, draw everything in boxes, right? Draw everything in like boxes. And then when you see a breakout, let's say like swing low, swing high, when you see a break through this box, that's when you can expect price to go higher, right? But that's kind of bullshit because I need to like retest that because that could, for all you know, that could be a manipulation. But the thing is, okay, this is the box theory, right? Let me just like show you guys. Can I just get like a white background? Okay, that sounds kind of racist, but anyway, so white background. I'll get like a white wallpaper, low key. See this one? I'm just gonna use this. Fuck, my bad. Hey buddy. Okay, there we go. There we go. There we go. There we go. We're good. We're good. Okay, we're good. Get up. All right, whatever. So basically, right here, okay. Let's say for example, what was I going to say? Yeah, box theory. So box theory is basically, let's say price is within this box, okay. So you're basically drawing a swing low to swing high. You're drawing a box around this, okay. So basically, what I'm expecting over here is, now let's say for example, price does eventually go. Oh my god. Right here, right. So imagine this here, okay? I cannot be asked to fucking redraw this. But let's say price does break through, like to this point. Like think of this as a candle. I don't know, it looks like a dick. But think of this as a breakthrough. So what I'm expecting here, let's say there's a fair value gap, an unmitigated fair value gap. Now obviously when price sort of retests this level, then goes like when you see this, right? You see this as a market structure shift, and then you entry for shorts, right? So entry for shorts. But in reality, it's just like a major pullback where it's basically sweeping the liquidity, and it's probably going to look something like this, and a distribution like right after towards what? Bullish by it's overall just bullish, but you just get faked out because you think there's a market structure shift, right? Because this looks like it's like, oh, you swept the liquidity, okay, in a normal perspective, right? This is the buy side liquidity draw, okay? And then you swept this liquidity and then you bought a reversal. That's what you're expecting, right? You see this probably like an inverse fair value gap. So this is what you're expecting to do. But contrary to your expectation, what price is really going to do is just go higher. Why? It's because it's rebalancing this unmitigated fair value gap, previous one. And the overall bias is just bullish, proven by this box theory. So it's basically retesting this, and then you see the distribution like right after. So it's pretty simple if you think about it. Anyways, let's get back.
Any value at all from this video, I would massively appreciate it. Subscribe to the channel if you love the content, and like the video, hit the bell notification, you'll be notified every time when I upload. It does me a massive service. It helps me grow this channel, and I appreciate every single one. Let's dive into this trade breakdown. Okay, so very simple. You've already seen the screenshot. I'll put it up one more time just here.
Yeah, so it does need to take this out because this is, once again, like I said, low resistance liquidity run. For example, these highs have not been taken on. All these are failure swings. Look. So I'm expecting this to be taken out no matter what. This fair value gap has been balanced out because this is already mitigated at this point, by this point, right here. But this has not been taken out. This liquidity has not been swept. So until this liquidity is swept, I just only have an overall bearish bias. I don't want to like fucking long this market.
channel, and I appreciate every single one. Let's dive into this trade breakout. Okay,
Because it's way too risky,
so-
that's why.
very simple. You've already seen the screenshot. I'll put it up one more time just here of what I was looking for with my members. Now let me explain why I was looking for that. So here we are, GBP USD.
Yeah, so you see a...
Like every time when I upload, it does me a massive service. It helps me grow this channel, and I appreciate every single one. Let's dive into this trade breakout. Okay, so very simple. You've already seen the screenshot. I'll put it up one more time just here.
Yeah, so you see this market structure shift. You see the pullback, FVG entry. So you see a market structure shift confirmation. And then you see this fair value gap manipulation. You see the fair value gap, probably like an inverse fair value gap, unmitigated one. And then you entry, basically short the market towards this drawn liquidity. So that's pretty simple. Like after this high is taken out. Know what I'm saying?
Here of what I was
But until then, I'm bullish. I'm not trying to entry. Because it's a low resistance liquidity run until then. So do I want to entry? Probably not. Even after it takes out the liquidity, I want to see a market structure shift pullback entry, which means it shifts market structure, right? And then it confirms, that's the confirmation, and then it pulls back towards my inverse fair value gap, and that's where I entry. Ideally, I would expect an manipulation even at the fair value gap manipulation, in other words.
looking for with my members. Now let me explain why I was looking for that. So
I have all of them over here, like listed down over here. So
here we are, GBP
let's
USD
get back.
on Wednesday the 7th of August, right? You can see if we look at price in here. So this is the price action. Now, if you remember carefully, I'm always trading the 15-minute time frame. When I'm trading intraday, right, my scalping strategy, my intraday strategy, I'm always looking at the 15-minute time frame. So step number one, identify my directional bias. Remember, I always want to know where am I trading, higher or lower. So if you just zoom out like this right now, you can very clearly see the price, we had a low, we had a high, and then we broke the low that was in control, give us a break of structure to the downside like that, and then this is the current low, and currently we are sitting between the old swing high up here and the current low down here. That is our trading range. Therefore, I only want to go short, right? And currently we are sitting between the old swing high up here and the current low down here. That is our trading range.
Low key, this has not been taken out either. Well, this is awkward. I mean, overall, at some point, it's obviously gonna like. I'm expecting price to low-key take this out and then like shoot all the way up here. Like after maybe a rebalance over here, but you see, you get the point. So I'm expecting price to low-key balance this, because this has not been balanced either. Look at this. Failure swings.
Therefore, I only want to go short, right? I'm not interested in longing. I'm interested only in shorting. I'm interested only in taking out this low down here.
Yeah, but then afterwards, you wanna take the high.
Because I know that that's the
But if it doesn't manipulate the lows, then obviously I would be expecting to take it, you know.
next target
That's like the closest.
price. It just needs to have somewhat of a pullback, right, before trading into that level. And I will sit patiently and wait for price to come into all of the other steps and show me that it's ready to do that. So step number one is obviously my directional bias. I know that we're bearish. Great. So I have swing high, I have swing low. Perfect. I know I'm bearish. I'm only looking for shorts. Step number two is to identify an area of interest. And so
Identify. Oh my god.
what I want to do is
It's all good. It's all good. I'm being such a corny little bitch. Look at this. Manipulation, and we have distribution leg right after. This inverse fair value gap, obviously. So
I look at this price leg, right, where all the aggressive moves came out of, and I want to identify exactly what it is I showed you. Right? I want to identify area.
okay, so this is the order block, of course. Basically, it's retesting this order block over here.
Where we have a little bit of a range and then aggression.
Super low resistance liquidity.
A little bit of a range and then aggression.
Well, what's super? Oh my god, I cannot speak. I can't speak. Yes.
Swing high, I have swing low. Perfect. I know I'm bearish. I'm only looking for shorts. Step number two is to identify an area of interest. And so what I want to do is I want to look at this price leg, right, where all the aggressive moves came out of, and I want to identify exactly what it is I showed you. Right? I want to identify areas where we have a little bit of a range and then aggression. A little bit of a range and then aggression. That is what I want to identify. So if we look at where we've come from, let's actually dive into that. You can see that we had price pushes down, a little bit of a range, a little bit of aggression, a little bit of a range, aggression. Perfect. So there I know that there was a range and aggression. But the issue is this area has already been mitigated. Price has already come back to this level with this. Remember the 1, 2, 3 candle sequence? We don't get that 3 candle sequence, right? So we move on. Okay, we push down, have a little bit of a range, a little bit of aggression, and then we have another range and aggression. Okay, great. Look right here, we have a range, right, where we're sitting sideways price action, and then aggressive momentum that comes down into the price leg. So we're gonna mark out that range like that, and then
Yeah, basically the upward candles before the downward push. Simple as that.
if you
The upward candles before the downward push.
look where
I think this is called a forgot what this was called. Well, let's just call it the upward candles before the downward push, okay? I don't want to overcomplicate it with all this fucking terminology. Let me just call it the upward candles before the downward push. Simple as that. Downward push. Simple.
the aggression comes in. Where is that? It's this final candle, and then this next candle, and then
Look. there's basically like a lot of pressure in the market if it sees these upward candles before the downward push. Simple as that. Okay, simple fucking stuff.
This third candle. So if we go to the low of the first candle and the high of the third candle, is there a gap between them? Yes, there is. That is a fair value gap. That tells me then that I know this is an area the price will come back to. So this right here, this area where price is, right, this level here is the level that I'm interested in. This is the range and initiation. Cool. That's the level. So I want to map that area out, and I want that to be my point of interest. I want price to react from this level, and I'm not just gonna, blindly take my trade from that level. I don't just want to put my entry here, and my stop loss here, and my take profit here, because that only gives me a risk to reward ratio of 2.87.
Good point. I like that. It's a point of interest. I didn't consider this before. Look. POI.
Meaning if I risk $1,000 on the trade, I'll only make $2,870 back from that. That's not what I'm here for, right? I need bigger risk to reward to make it work.
Damn, okay.
So what I like to do is I like to confirm my levels. This gives me higher probability of being correct. It tells me, yes, you're correct. It shows me I'm at the poker table. I see my opponent's hand. Then I can act. Then I can bet chips. So what am I looking for? As you've already seen, which I outlined, and I'll show you one more time, I'm looking for price to come into this level. Okay, step number 3, identify liquidity. Where is everybody else? Everyone else is looking at the same picture as me, right? So I need to take a step out, and instead of trying to look at what the market's doing, look at what everybody else in the market is doing. That's going to help me understand where everybody else's mind is at. So what I want to do is I'm going to go, okay, in this blue box right here, guys, is Asia session range. And this green box right here is London session.
Okay, so this is Asia. Okay, that makes sense. I was thinking this is London and this is New York. But yeah, okay, that makes sense too. Asia, this is London. Okay.
Range. A lot of times, London will sweep Asia. In this specific day, it did not. It stayed inside.
Okay, that's interesting. A lot of the times, London will sweep Asia. In other words, take out the lows.
Have trendline liquidity going down in here, right? So I know that there's
yeah, like I said, no resistance liquidity around.
some traders who are looking at that as though that is bearish. So maybe they want to sell this
What? No.
third touch in here, and maybe they want to put their stop losses above this old high. Okay,
Oh yeah, breakout trading.
so we have liquidity. We also have, relatively equal bearish. So maybe they want to sell this third touch in here, and maybe they want to put their stop losses above this old high. Okay, so we have liquidity. We also have, though that is bearish. So maybe they want to sell this third touch in here, and maybe they want to put their stop losses above this old high. Okay, so we have liquidity. We also have, relatively equal highs across here. Again, could be a different sign, a different type of trader looking at that and saying, you know what, price come up, traded away, come back up, respected this area, and then continue trading lower. So they probably have areas of interest here where they're trying to sell in here. Where do their stop losses go? Their stop losses are going to go above these areas in here, or worst case scenario, above these in here if they're protecting them. Okay, cool. That's that side of the market. What else do we have? Selling here, trader looking at that and saying, you know what, price come up, traded away, come back up, respected this area, and then continue trading lower. So they probably have areas of interest in here where they're trying to sell in here. Where do their stop losses go? Their stop losses are going to go above these areas in here, or worst case scenario, above these in here if they're protecting them. Okay. We have areas of interest, different sign, a different type of trader want to put their stop losses above this old high. Okay, so we have liquidity. We also have,
I mean, this is a low resistance liquidity round. That's why we in fact trying to take out this high. So I mean, it makes sense though. Hold up, give me a sec.
Relatively equal highs across here. Again, could be a different
SMT.
sign, a different type of trader looking at that and saying, you know what, price come up, traded away, come back up, respected this area, and then continue trading lower. So they probably have areas of interest in here where they're trying to sell in here. Where do their stop losses go? Their stop losses are going to go above these areas in here, or worst case scenario, above these in here if they're protecting them. Okay, cool. That's that side of the market. What else do we have? Well, we have trendline liquidity building on the downside. So there are traders looking at this and going, okay, one touch, two touch, third touch.
Breakout trading.
Maybe I'm looking at buying from this level.
Back to breakout trading.
So they're buying at these areas. Now, where are their stop losses? Their stop losses are likely under the lows in here, the lows down here, or the lows down here. Okay, great. What else do we have? We have equal lows right here, right? Again, just move that for a second. We have equal lows right here on these two candles, right? What do we see? We have one bounce and then an aggressive reaction back out. So maybe again, there's other traders looking at getting involved in the market in these levels. Now, if there was buyers in here, where would they put their stop losses? They're going to put them below this low or below the old low in here, right? So you can see my framework of thinking. I'm not trying to identify what's the most important thing that I want to do. I just want to make sure that I'm not getting involved in any of these traps, right? Because all of these different levels here are traps. There's no two ways about it because we need that liquidity. So I already know, number one, smart money are going to take price lower because that is the structure. Smart money has that much money thinking. I'm not trying to identify what's the most important thing that I want to do. I just want to make sure that I'm not getting involved in any of these traps, right? Because all of these different levels here are traps. There's no two ways about it because we need that liquidity. So I already know, number one, smart money are going to take price lower because that is the structure. Smart money has that much money, it can't hide its footprint. It's always leaving clues. So if the market structure is bearish, that is because they are taking the price lower. They expect to hide its footprint. It's always leaving clues. So if the market structure is bearish, that is because they are taking the price lower. They expect the price to go lower.
Right.
I identified area of interest where price could potentially reverse from. Great. I've identified all the liquidity and most importantly, time-based liquidity because what's going to
Mm.
happen in just a moment, guys, is New York session is getting ready to open, right? 6:30 a.m. New York. So New York session is getting ready to go. So now I'm framing is New York's price could potentially reverse from. Great. I've identified all the liquidity and most importantly time-based liquidity, because what's going to happen in just a moment, guys, is New York session is getting ready to open, right? 6:30 a.m. New York. So New York session is getting ready to go. So now I'm framing
Right.
my
That's right. I mean, it makes sense though.
hypothesis. I'm framing my game plan. And here's what I'm looking for. I know that I only want to go short. And
Bro, low-key stink. Because I haven't had a bot in like 3 days or some shit. Who am I kidding? Probably like 3 weeks at this point. Oh my god, bro. Oh my god, bro. I'm about to blow. What the fuck? Who the fuck is this? Oh, hell
I
no.
also know that I need to avoid all of this 6:30 a.m. New York. So New York session is getting ready to go. So now I'm framing my hypothesis. I'm framing my game plan. And here's what I'm looking for. I know that I only want to go short. And I also know that I need to avoid all of this liquidity. I know that I have a point of interest in here. So this is the plan I build in my head. I think to myself, okay, cool. I need to see all of this liquidity run. All of these sell stops are going to act as buy orders for smart money to take the opposite side of the market. New York session is open at the exact same time. And so if we get a breach on all those stop losses, everybody inside a New York session is going to be opening with the market open of prices aggressively trading higher. They're going to FOMO into that market, or they're just going to have a long bias because price is trending higher. Great. So now I know that when New York opens, there's going to be a lot of buyers as well, which is smart money is going to be able to absorb with their positions. Okay, great. More buyers, right? Unfortunately, this market, 95% of people lose money. So you just need to understand what most people are doing and do the opposite, right? I think Warren Buffett says literally do the opposite of what everyone else does. And that's the game we're playing. So all of these New York traders are going to get involved in here, and they are going to buy, and then we're going to use that liquidity.
NY,
And then
yeah.
gonna,
NY longs. Bro. NY longs are kind of problematic. Yep. Let's get it. Let's get it. Yep. Hold up. Oh my god.
maybe
I'm like fucking 18 years old and I have a back pain. Like I'm 75 or some shit. Hold up. Oh my god. I need help. I need help. Back pain.
be good into this area.
Low key.
Yeah, but I'm only going to get interested in this area if I drop to a lower time frame and I see this pattern. I see a push up, pull back, push up, shift.
Yeah, so this is the internal term low being broken. So I'm expecting a pullback entry.
That tells
That's what I'm expecting to do.
me that there are sellers at this level. So now I can
Yeah, so
position myself
this is the inverse value gap that I'm planning to short.
with those sellers, right? And what's a lot of other traders doing? A lot of other traders that are breaking this high right here, there are sellers at this level. So now I can position myself with those sellers, right? And what's a lot of other traders doing? A lot of other pullback, push up, shift. That tells me that there are sellers at this level. So now I can position myself with those sellers, right? And what's a lot of other traders doing? A lot of other traders that are breaking this high right here, they're going to try and buy again.
Oh my god. I should be laughing because I do the same shit.
So now I can position myself with those sellers, right? And what's a lot of other traders doing? A lot of other traders that are breaking this high right here, they're going to
How does he not break character when he's saying that shit?
buy again in here, right? Break and retest. So there's going to be more buy, and what's a lot of other traders doing? A lot of other traders that are breaking this high right here, they're going to try and buy again in here, right? Break and retest. So there's going to be more buyers in here, enabling what? Smart money again to get involved in the markets. So all of these buyers in here, where are they going to put their stop losses? Probably below this low, maybe below these lows. So that essentially enables me to understand that all of these guys also liquidity, because what happens is if price comes down to these levels in here, well, what happens? In fact, it's just a domino effect, right? If price comes into the first liquidity pocket, all of these stop losses of these buy positions get executed as sells. So price sells lower into more liquidity, which pushes price further, into more liquidity, which pushes price further, which pushes price perfectly into my take profit.
Yeah, I get it. No, because here's the thing, right? This liquidity has not been swept, right? And this liquidity oh my god, this liquidity has not been swept either. So I'm expecting this like whole momentum towards this last draw on liquidity to be like risk-free completely. So I'm just gonna like take a snapshot of this bullshit. Back pain. Back pain. A lot of auto-tune, fire retune speed. Also, Waves has good plugins. I use them 100% of the time. Interesting. Waves. Waves. What do you mean waves? Ocean waves. I don't know what's wrong with me, bro. A lot of auto-tune. Fire retune speed. Right. Interesting. Also, Waves has good plugins. Waves? I use them 100% of the time. Is Waves like a person? I don't know, man. I don't know, man.
Level. My take profit is just going to get
Why am I so fucking
these
happy? It's such a depressing ass state, but I'm happy. Cause I'm happy, I don't know how you feel. I forgot the rest of the word, but you get the point. That's what you wanna do. Hey, quick question: is it to anyone in here? Do you guys play like Among Us by chance? You know, not cause of like anything specific, but you get the point. Actually, I don't really understand why I asked that question, but Among Us, yes sir. Rapper Babytron. Shout out Black Boy Max. Gold on the way. I'm a Black Boy like Max. What? You need God in your life. No, I don't. McLaren. Interesting. The Titans of Technical Analysis. Why am I saying this? Interesting. Bro, my friends out here having fun. What the fuck? Alright, anyways, let me get back. Let me get back real quick. Yes, sir.
lows down here. Because after that, I don't know what's going to happen. There's no more
Yep.
liquidity, and this sells lower into
Hmm.
where are they going to put their stop losses? Probably below this low, maybe below these lows. So that essentially enables me to understand that all of these guys are also liquidity. Because what happens is if price comes down to these levels in here, well, what happens? In fact, it's just a domino effect, right? If price comes into the first liquidity pocket, all of these stop losses of these buy positions get executed as sells. So price sells lower into more liquidity, which pushes price further into more liquidity, which pushes price further, which pushes price perfectly into
Low resistance liquidity runs always have to be taken out, basically. Low resistance liquidity runs have always have to be taken out. Simple as that. Alright.
my take profit level. My take profit is just going to get these lows down here. Because after that, I don't know what's going to happen. There's no more liquidity and there's no more footprint just yet for smart money. Because that's happened. The trade idea is complete. And that's exactly what I was waiting for. And that's exactly what you can see in the screenshot that I shared.
Interesting. Yeah, you see this over here? Where the fuck did the entry? Oh yeah, right after this. Where the fuck is it? Right after this manipulation. So it's a bit zoomed out, but wait, this is not this. What? It's basically rebalancing this. That's what he's saying. But I'm not seeing a proper sweep here though. I mean, it's like pull back to like this area. But this is perfectly aligned with this though. Like it's perfectly aligned with this swing high. Drawn liquidity. Taken out. Market structure shift. Let me just I wish this was like a bit more like let me just point that out on this. Inter-term low. Okay. Inter-term low. And they broke the inter-term low. Fair value gap pullback. Probably somewhere around here. And then we see the manipulation down towards. You put your stop loss here. And you put your TP all the way down here. Why? I can't draw. Why Because it's a low resistance liquidity run, simple as that.
share with
Because it needs to take out the lows, in other words. But it does need to go all the way up there after the rebalance. But we have a overall bias that we are bearish. That's why we want to take it low
you that I give to
first, and then go higher all the way through the highs, because this needs to be taken out at some point as well. So
my inner
yeah, right after it takes out like the very sweep, like sweeps this liquidity, you'll be fine to like go all the way towards the highs. What's this? Waves. Interesting. I'm gonna check it out later. Could you? Please, Kavi. Please, please, please.
inner circle members right before that trading session
What was that meme? I forgot.
happened.
I think it was like something.
These
I
lines, if
can't
you
remember.
guys are looking
My
get
head.
funded and make up to $10,000 a month from trading consistently, and you want to work with me in a private mentorship, then below this video is a link that will allow you to apply to work with me. Fill in the form, apply to see if you are a right fit to work with me, and if you are, I'll work with you and help you become a consistently profitable trader, get funded, and start making a full-time living from trading. But let's break the trade down. So essentially, we're just looking for the manipulation of these levels into this high. So I'm literally looking for exactly what you see on the screenshot, which I'm going to share with you right now once more. I'm looking for this. So let's play price and see what actually happens. Close this. So we begin breaching into these highs, but what else do we do? At the exact same time, now we create more equal highs. So there's more liquidity above these highs. And once price has breached all of this liquidity, and think about it right now, right? Now everybody's gearing up for New York session. So everybody's looking
I mean, Loki, even if you don't notice this, you can honestly like look at the market structure shift over here, like after taking out these highs.
at this from New York and they're thinking, oh my god, price has exploded. I want to get involved on this move and take price higher. So they're buys, right? They're putting their buy orders in these levels. And so smart money's able to use it inside that market. And then essentially they're putting their stop losses below these lows. Or you have the retest guys who are like, okay, price is rocketing. Okay, when price comes back down to here or here or here, I'm going to look at longing again. And so buys come in here. So for me,
All liquidity.
when price comes into this area, again, like I said, I'm not just entering from this area. I want to now drop down to the 1 minute time frame. Yes, the 1 minute time frame. And I want to do the same thing that I always do. I want to look at the market structure. You can very clearly see that at this moment in time, the market structure is bullish. So all I want to see is a change. I want to see, because right now I don't want to sell. So I don't want to go short if price is trending in the upward direction. I want to see, just like again, the poker, I always reference this. I want to see the market show me that it's now going down so that I can get involved in that.
Short-term low. Broken pullback.
That's my confirmation. And because I dropped to the lower time frame, because I dropped to the 1 minute
Because it's gonna like have some fair value gaps on the, imbalances while it's going down. So once it tries to rebound at whatever price range where the imbalance happens, I'm expecting a rebalance to go lower.
time frame, my stop loss is going to be so much smaller that I'll have a much larger risk to reward ratio.
Indeed. Yep. $1. Ooh, oh my god, $1. 1 minute.
Which will make me more money. So that's why I'm waiting.
That's right. Yeah.
I'm waiting for a break of this low.
Yeah. This is an intro-term low. So
And my scenario is either scenario A, we have something like this, and then I short, or scenario B is I have something like this, and then I want to see this, and then
in this case, it will be this. This is the intro-term low in this case. Oh, scenario A. Let me draw in scenario A as well. So I want to see something like this. Pullback, full fair value gap. Long shot this market right after the fucking fair value gap because it's a low resistance liquidity run. Low resistance liquidity run. Full sweep. Trade. Yes, sir. Oops, my bad.
making sure. Either way, I'm waiting for price to go bearish. So we're waiting. Okay, price is 20 cents range. Now notice what's actually going on right here, right? With price ranging like this. Again, price is ranging like this, which means that right now there are a lot of orders taking place at the same price level, which means there's a battle right now between buyers and sellers. Right, a very obvious battle because it's New York open, so there's a lot of volatility. But
Yeah, that's right. Because a lot of people are trying to like long the market. And then there's a lot of like sells as well from smart money. So it's smart money versus retail. That's literally what this is. Wire keeps getting stuck under my table. That's so annoying. It happens like every single day. Oh my god. Fortnite.
price is staying in the same range, which means
See this? This fair value gap has not been manipulated before.
at this key level, after we've taken those liquidity coming out of this area, there's loads of people that
Bro, what the
are
fuck?
getting to this level. And smart money are absorbing all those orders in this process. That's why the price is staying at this level and continues to stay at this level for an extended period of time until you get finally the buyers, right? The buy orders in here get exhausted. There's no more orders. I want to buy the market into this level, and smart money are absorbing all those orders in this process. That's why price is staying at this level and continues to stay at this level for an extended period of time until you get finally the buyers, right? The buy orders in here get exhausted. There's no more orders waiting to be filled from buyers at this level, right? There's only sellers that take over the market. And when I see that, I see those sellers take control of the market. Remember what we're looking for a range and then the aggressive move to the downside. And then I always want to look at taking pretty much the entire range if I can, right? If it makes sense from a risk reward perspective, the entire range of price like this, because this is where the orders are transacted, and then there's the aggression, and then we can come back in here to make the rest of the orders, and it'll be met with, bearing in mind, we have to understand from this level right now is that there are so many people or orders in this level that have just been transacted at sells, right? And there's so many sell orders in this level. You can see it very clearly.
Yep.
Buyers and sellers are aggressively reacting. Sellers have come out on top. They have won, and we have shifted bearish, so it's told me that we're going lower. So now, if the price comes back into here, what's going to happen? All of these sell orders are going to be protected, right? The people who are short in the market here have a vested interest in protecting their position. If that means that they have to deploy more capital so that they don't lose money, that is what they will do, especially large players, right? So I just want to understand that concept, and I want to put my shorts in here. I want to put my stop loss at the highs up in here, right? 6 pip stop loss. And where do I want to target? Well, if you remember, I'm just expecting the trend to continue, right? So if I go back to the 15-minute, I just want to see all of the liquidity that now sits at the lows down here, right? All of the lows down here is now full of liquidity. All the buyers have been
No resistance to query run. All of this.
Taken out of the market. All of the sellers, have been taken out.
Manipulation right here. This took out these highs, and boom. I'm expecting this to be taken out.
The market, right? And now all we have left is all the liquidity down here. So what's going to happen is when this liquidity gets filled, it's going to act as sell orders because that's how they get out of their positions, which is going to make price go more aggressively to the downside, right?
Right here. Boom. TP.
So that is ultimately what I want to look at. I want to
Damn.
this lower in here. I do have a rule, and I'm going to share it with you, that I take off 50% of my positions at 1 to 5 risk reward. So if I'm risking $1,000 on this trade, and I was risking more, then I would have made $5,000, right? And if it run to the full take profit, $1,000 would make me $8,270. And if I close 50% here, then I'll make half, so 2,500. And then if I close 50% here, I'm going to do 4.15, right? So $4,150. Giving a combination of around about $6,500-ish, near about, if I was to risk $1,000 per trade, and I risk more than $1,000 per trade. So let's see how a price plays out in this scenario, right?
Boy, no way, boy. I'm not risking fucking $1,000 in a trade. I'll risk like $50 at most, okay?
Let's close this a little bit. It's a little bit big, and I like things always organized and clean. And let's just see how price plays out to this level. So price goes a little bit lower, no problem, right? Creates equal highs internally, right? Relatively equal highs at least internally. Great, no problem. Perfect opportunity to get swept, right? And then price tags into our area. Now notice that we're now back in an area that's heavily protected. So there's a pretty high probability that this area of price could stay intact and could be respected. And then we begin to get our reaction out of that level. So I'm going to speed things up now and go to 5 time frames. I don't want you to sit here and just watch everything, right? Notice that what we have in here is, if we go back to the lower time frame again, is in here, there is still a level of range, aggressive move, first candle, don't meet, fair value gaps. There's still a potential for price to come back into this level. That's why I haven't gone to break even yet, right? That's exactly why I explained why I think it's break even when I give this to the members, or when we walk through this with the members as well, because price comes back into that exact area and then begins to continue moving lower, at which point then I can go to break even, and let me show you why. You can already see right here, right? Yes, we still have the range, we still have the aggressive move, but look, this is the area where price
Auto block retest over here. So I'm expecting honestly, I'm expecting price to low-key because this is paired up with like a high time frame PDRA as well. What I'm expecting here, because this highs were also swept over here, right? Highs were also swept. You can see these highs were swept. So you don't really need to pay attention to this, to be honest. As long as you see a inter-term low being properly broken with a pullback FVG or a sort of order block to entry from, you can entry towards this lower resistance agree run, because all these lows have been failure swings. So it needs to take this out. So ultimately I would be targeting towards this. That's the whole concept of this, because all these failure swings have a bunch of liquidity that needs to be taken out. So this is where it starts. Because up to this point, I'm assuming the previous swing has been taken out. So yeah, that's pretty much how this goes.
I want to look at taking this lower in here. I do have a rule, and I'm going to share it with you, that I take off 50% of my positions at 1 to 5 risk reward. So if I'm risking $1,000 on this trade, and I was risking more, then I would have made $5,000, right? And if it run to the full take profit, $1,000 would make me $8,270. And if I close 50% here, then I'll make half, so $2,500. And then if I close 50% here, I'm going to do 4.15, right? So $4,150. Giving a combination of around about 6.
Yeah, he's got like fast math. 4.15. I was like, what is he talking about? 8.2070 divided by 2. That's some fast math.
$500-ish, near about. If I was to risk $1,000 per trade, and I risk more than $1,000 per trade. So let's see how a price plays out in this scenario, right? Let's close this a little bit.
Sure.
It's a little bit big, and I
He's risking the swing high as the stop loss.
like things always organized and clean, and let's just see how price plays out to this level. So
You gotta defend your
price
stop
goes
loss a
lower,
bit,
no problem,
but
right, creates
it's all good.
equal highs internally, right? Relatively equal highs at least internally. Great, no problem. Perfect opportunity to get swept, right? And then price tags into our area. Now notice that we're now back in an area that's heavily protected. There's a pretty high probability that this area of price could stay intact and could be respected. And then we begin to get our reaction out of that level. So I'm going to speed things up now and go to the 5 time frames. I don't want you to sit here and just watch everything, right? Notice that what we have in here is, if we go back to the lower time frame again, is in here there is still a level of range, aggressive move, first candle, third candle, don't meet, fair value gaps. There's still a potential for price to come back into this level. That is why I haven't gone to break even yet, right? That's exactly why I explained why I think it's break even when I give this to the members, or when we walk through this with the members as well, because price comes back into that exact area and then begins to continue moving lower, at which point then I can go to break even, and let me show you why. You can already see right here, right? Yes, we still have the range, we still have the aggressive move, but look, this is the area where price is going to probably respect if that area gets respected, right? This final level, right? The first candle, second candle, third candle here, and my break even is above that, so it's fine. I can move my stop loss to break even at this point and take my risk off the table. And yeah, pretty much that is the position. I'll kind of let this position play out because it played into the next day, and I did catch another trade the next day, which is also something I obviously forecasted beforehand and broke down with members, but I'll leave that one for now. And this is enough information, don't want to overload you. But yeah, pretty much then heading into the next day, there's the Asia session. And again, if you guys remember my strategy, you'll be able to see the trade and why I took it, right? There's the Asia session, right? And then London session is opening right now. What do you think the London people are looking for? You think they're probably looking for buys, right? And so where's the liquidity? The liquidity exists where at the lows of the market, you can already
Usually, if London does something, there's always a reversal and continuation on London reversal, New York continuation. So basically, in this case, because London took this, I'm expecting price to long, but that's not always the case. Look,
see the price does what we need to do, pushes up, pulls back, shifts. I get in here and I ride all of this
short-term low broken, pullback entry. There we go.
down here, and that also gives me a 1 to 5 reward, which you've probably seen inside the screenshot. Because the video, I'll see you pulls back, shifts, looking for buys, right? And so where's the liquidity? The liquidity exists where at the lows of the market, you can already see the price does what we need to do, pushes up, pulls back, shifts. I get in here and I ride all of this to the down here, and that also gives me a 1 to 5.
Yep. Indeed, man.
Reward, which you've probably seen inside the screenshot. Hope you guys enjoyed the video. I'll see you in the next one. Don't forget to like, subscribe, and check the link down below if you want to work with me. Catch you guys soon. Bye bye.
I'm into it. This mental pressure got me popping pills and shit. There ain't no feeling like this. I feel it in my gut the way you're grabbing my skin. I know you'll never feel better.
Damn.
When I make you feel it, ain't no feeling like this. It's like this. It ain't no fucking secret, girl, I'm into it. I wanna see you hide behind your innocence. Turn your necklace into my hand again. I wanna see you. This mental pressure got me popping pills and shit. There ain't no feeling like this. I feel it in my gut the way you're grabbing my skin. I know you never feel bad but never rising. When I make you feel it, ain't no feeling like this. It's like this. It ain't no fucking secret, girl, I'm into it. I wanna see you hide behind your innocence. Turn your necklace into my hand again. I wanna see you. There ain't no feeling like this. Never feel bad but never rising. When I make you feel it, ain't you grabbing my skin. I know you never feel bad but never rising. When I make you feel it, ain't no feeling like this. It's like this. It ain't no fucking secret, girl, I'm into it. I wanna see you hide behind your innocence. Turn your necklace into my hand again. I wanna see you vulnerable, I'm into it. Turn your necklace into my hand again. I wanna see you vulnerable, I'm into it. When I make you feel it, ain't no feeling like this. It's like this. It ain't no fucking secret, girl, I'm into it. I wanna see you hide behind your innocence. Turn your necklace into my hand again. I wanna see you vulnerable, I'm into it.
Damn. I wanna fuck you up. Reverse the calculator.
My skin, I know you never feel bad but never rising. When I make you feel it, ain't no feeling like this. Ain't no feeling like this. It's like this. It ain't no fucking secret, girl, I'm into it. Like this. It ain't no fucking secret, girl, I'm into it. I wanna see you hide behind your innocence. Turn your necklace into my hand again. I wanna see you vulnerable, I'm into it.
Hey yo. that last line, what the fuck? The last line is a little questionable. It's all good though. Oh, me. Right? Okay. Anyways. I wanna cook you. Reverse a calculator, buck you right now. Let's make a movie go out of let's make a movie go out of the shooting camera. Fuck. I can't fucking say that. Let's make a movie go out of the shooting camera on my left with your hands on my right. Water keep dripping on all of these pipes. On all of these pipes. Sex is a drug observer. So it's cancer. Tell me what it. You can lose it. When you're on this pony. We can do this in the morning. So get me. I'm in a going crazy. Yeah. You see wherever you want. I got bananas been on the mug. Lately been feeling like a chunky butter beat it up like a drama. You know that I nasty, you know that I want. Bro, hold up. I can't fucking go with that pitch. Anyways, PD arrays, so I need to make sure. Low resistance, clear runs. Pay attention to that. Which swings are not swing lines not taken. Okay, so this is basically what you want to do. You want to make sure the highs and lows are taken out. Okay, it's pretty fucking simple. So you see this low has been taken out, and see all these lows. So it's a pretty fucking good bias towards a high to be taken out, right? So obviously you can see that this high has not been taken out, but this high has been taken out. Okay, so it has been taken out, but this, low key, this might be stupid as fuck, but I'm gonna long this market all the way. Like literally hold this trade, hold it by the nutsack type of shit. And I was like, so I'm gonna like low key. Wait, what was that? Oh yeah, okay. So I'm just gonna like long this market with my stop loss all the way here, and my TP all the way here, man. Wait the hell, brother. This was not taken out whatsoever. So I could like low-key aim for like the highest TP range. I know for a fact that it's gonna take this out though. This took out this high, right? But these didn't take that out. So I'm expecting price low-key to like rebalance that. Low-key, high-key, key, do you love me? Are you riding? Say you never ever leave from beside me. Cause I want you, and I need you, and I'm down for you all. I'm tweaking, bro. Alright, so low-key, I wanna like, nah, that shit should be like some sort of like, nah, I'm not trying to risk that much. That's never mind. That was brain dead. I shouldn't be doing that. Anyways,
This one simple and easy market structure trading strategy will get you funded this year. The biggest mistake I see traders make is they don't
this
understand.
guy's pretty
what side-
fucking good though. Like his content's pretty good. You can learn a lot. You can learn a lot. Yes, sir. Auto block retest, okay. I literally watched this. This is box theory basically. Box theory. Full box? Piece control? Shit on. Yes, sir. You see that? 10K a month, broski? That is crazy. That is some fucking crazy numbers, huh? Easiest SMC trading strategy. Okay. Interesting. You know, I'm just gonna like stick to his like latest videos. I bet his is bro. What is going on here? Okay, so you can see that this is the market structure trading strategy. What's going on here? Oh man. The untold truth behind actually making 10K a month with Forex. Interesting. Anyways, that's all good though. So I'm just gonna like continue with my usual. So
of the market they should be on.
interesting. Yep.
Should I go long or should I go short? In this video, I'm going to clear all of those doubts up for you. This is going to be a 5-part series. Let's dive into
Did he like record this off his MacBook or some shit? What is this aspect ratio?
part number 1. Now, stick around to the end of this video because I'll be showing you this trading strategy in theory, and then I will be showing you practically in the charts. You're not going to want to miss this. So this is textbook market structure. This is the type of market structure that you've probably been taught online. And yes, it works, it's understandable, but when we get into realistic market structure, you'll understand why it's not as simple as this. But anyway,
Yep.
textbook market structure. Essentially, market structure is what's going to indicate to us what direction price is trading. If market structure is trading lower, so it's bearish. Putting in your
Best thing you can do is just draw a line. Like literally just fucking draw a moving average line. You know what I'm saying? Like for example, like right here, you can see that this is basically what the market is doing. So now you can see where the fuck the market's going. Simple. Pretty fucking simple. Look. You can see that this was breaking structure towards the downside. And this right here is where you see a pretty good reversal. Now what's the reasoning for this? This right here. Okay, let me just get rid of this for now. See? This right here. These lows, all these lows parallel were taken out. Look. All these lows. Even though this low took out this low had to take this out. And then this low took this out. Now what do we have? Bullish strength. And you see over here, this inter-term high has been broken. So what does this indicate? A pullback shift in structure. Okay, a change of character, as some people call it. And you can see that these highs have not been taken out. So I have a pretty confident bias until that point, because these have been taken out right here, and this has not been taken out. Simple as fuck. This has been used before. So this is pretty fucking textbook over here. Failure swings, all failure swings. And then we see this liquidity being taken out. This one right here, SMT right here. Man, can I fucking... Okay, there we go. Right. So obviously if I enter here, if I target this as my take profit, I can fucking make the bank. Yes, sir. Easy. Easy as fuck. Simple. Pretty fucking simple. So you can see this manipulation, market structure, distribution like right here, so I'm expecting low-key see a pullback, and whenever price has a manipulation pullback, that's when I'm gonna entry in the next hour or so. So I can target this, draw on liquidity. That's what I'm targeting. Okay, can I just get rid of this? So I'm just gonna like long the market over here, somewhere like right here. You know, target this order block as my entry. Now I'm saying on some shit. Put this a few pips below, maybe over here, and target this high. It's a 1 to 6.3, but ideally I would take like half, just like Lewis. 6.35, so that's like 6.35 divided by 2, 3.12. So let me just go for a 3.1, 3.12, 3.2. Okay. So yeah, basically this is where I'm gonna entry towards. If it in fact does pull back, I can in fact take this up to... No, this is like a what? What's the size of this trade? 12.62. So what's half that? No, 12.62 divided by 6.31. So I'm just gonna try to take it all the way towards 6.31. There we go. So after the pullback, of course. See this intra-term high being broken? That is pretty good confirmation. And this high has been broken as well, so that's extra confirmation. And we see the market structure overall for what it is. That makes it so much easier. No PDRAs, none of that. I mean, obviously we have a bias, but, you know, until the bias has been met. Because this, obviously we need to consider the bias, right? So you can see that this has been, you know, manipulation distribution right after. This is the fair value gap on the 4 hour. So up to that point, I'm expecting a price rebalance. And low key, this low needs to be taken out. So let's see if there's any other fair value gaps that need to be taken out. No, I don't expect to take anything else. For example, this has to be taken out, right? Yeah, this has to be taken out. For example, all these were failure swings. So eventually I'm expecting price to take this and then go higher. Sorry, you know, take this, go lower, and then go higher. Higher, yes sir. And pull back